Today's market call is presented by Fidelity Investments and their all-new advanced trading platform, Fidelity Trader Plus. With Fidelity Trader Plus, you can customize your preferred tools and charts and tap into crucial data across all your devices. So I can save an order on my desktop at home, get a mobile alert here at the studio, and complete the trade in the Fidelity app without starting over. Try it for yourself at fidelity.com/trader plus. December 22nd, this is Market Call. I'm Guy Adami. That is Dan Nathan, who, by the way, went 6-0 in the league where they play for pay. That's, of course, the National Football League this week. He's been blistering. I think you're 39-20 this season. Is that correct?
In the NFL, 39-20.
The league where they play for pay.
I just ran through, Bill Simmons on the Ringer, Bill Simmons.
I love Bill Simmons.
Yeah. Every Sunday night after the Sunday night game, they do Guess the Lines. Him and, or is it Ryan Russillo? Is that who he does it? Ryan Russillo.
Guess the Lines.
So that must
be scintillating television. They basically sit around and they say, okay, the Giants are playing the Rams or something. Yeah. And what's the line?
Yeah. And they'll say, all right, Rams on the road. They'll say they're -6.5 or something like that. You know what I mean? And then they check the lines. But we were just doing a little bit of my picks to click for next weekend. Well, we're going to have Christmas, and then we're going to have Saturday, then we're going to have Sunday, then we're going to have Monday night. That must infuriate you that is Thursday night football. Well, actually, there's 3 games on Thursday, no games on Friday, games on Saturday, games on Sunday, and 1 game on Monday night.
Yeah.
Like on a scale of 1 to 10.
That's infuriating. I'm sort of a traditionalist.
Really?
I Monday Night Football I grew up with, so I always assumed that was a thing. Then they went to these sort of 8:00 games on Sunday, which I tolerated. But once they went to Thursday, and then they decided they need a Friday after Thanksgiving, and it's just they've completely.
Well, you must have once college football. And guys, we're going to get to the markets here. There's a lot actually.
Man is great, by the way.
Man is great. I mean, I think the Saturdays once college football is done, I'm all for that. Why not?
Yeah, sure.
You know what I mean?
Everybody.
All right, so 39-20, 6-0 this past weekend. These guys don't care, but I won't shut up about it. If my trading has been bad these last 2 weeks, I can lock in on my NFL gambling prowess.
And that's another reason to subscribe to our Substack, the Risk Reversal Substack, which seemingly grows every day. Check it out. Doesn't cost you anything, and you get the picks to click and the Substack.
Yeah, you get my picks to click. 6-0 is pretty epic, but whatever. Maybe at the end of this podcast. By the way, throw some questions in there. Guy and I are fired up to take questions. We're gonna have a little time. We got a holiday shortened week. We got maybe night trading, and we're also going to do a mailbag on the Risk Reversal podcast next week. So send your questions to contact@riskreversal.com, and we're going to answer a bunch of them, Guy. Let's talk really quickly about last week. I had one of these moments. What day was it where the tech, the AI thing just got murdered? Was that on Wednesday? I think it was Wednesday, right?
I believe it was, yes. I'd have to go back and look, but yes.
And like a few stocks like Broadcom comes out, AVGO, hadn't seen an uptick, I want to say, in 3 or 4 trading days since they reported. It bounced a little bit on Friday, but it's down again today, which is why I don't believe, Guy, that the bloodletting and some of this stuff is over. I think if you're a Broadcom fan, you would have liked a full, and if the stock was already down after those earnings, you might as well fill in that gap going back to late August, right? Maybe you're kissing that 200-day, which has been rising. I mean, you want to find some areas where stocks are really oversold, and Oracle might have done that. And I know that let's throw up Oracle for a second. You talked about that gap fill. This is a name that we've been all over. We've been talking about it. It's gotten here, move it over a little bit. It's gotten a little oversold, and you thought you thought it might get to that 200, which would fill in most of that gap.
Yeah, and that still makes sense to me. So you have a bit of a relief rally. I guess it was Thursday or Friday, but I also think the credit default swap started to sort of find their footing, which is one of the reasons the stock probably acted in kind. But it's going to trade off definitely CDS. But in the absence of bad news, if you want to draw a quick trend line from not the September high, but the October high, and draw that steep trend line down, Amanda, from there, and you'll see the points. I mean, you can see we're probably right up against it now, or we're getting there. So probably comes in somewhere around 200 or so. If you break that, I think you get a quick run to the 200-day moving average, and then we'll have another conversation. But, it's all about, look, it's trading, right? It's not, I'm not making any fundamental call on the health or the illness of Oracle here. It's more just a trading position. And I think you could probably get to that trend line and then trade through it and get to the 200-day.
Yeah, and again, over the last couple trading days, the sentiment was so bad into, where it's almost trading $175, which is really that breakout level if you think about it from, mid-June or so. And there was two pieces of news, like to your point about the CDS coming in a little bit. I think I'm looking at the chart right here. I think it's down maybe 25 basis points from those highs, which were basically 20-year highs. You have to go back to the financial crisis where they got that high. But the two pieces of news late last week, one, that OpenAI was looking to raise $100 billion at $850 billion. Okay. And the point there is to fund the Oracle build out, right? They got that huge contract. This is Oracle from OpenAI. And once folks kind of started to look around and say, oh, they don't have the money to do this. Well, that helps that. Okay. And I think that's one of the main reasons why the CDS has come in a little bit. And then the other one is that they're successful in this consortium, in this bid for TikTok. And I think people are excited about that. Obviously, it's another client for their cloud business. But again, they don't have the capacity to service OpenAI. I don't know how they're going to have a ton of capacity. Well, I'm sure it's much less capacity, by the way, than what they're building out for OpenAI. But those are two pieces of news, right? And I think to your point, though, Guy, with that trend line, if it gets rejected there, then it's going back through 175. Like if he can't take this sort of news and get a proper squeeze going. And so to me, that's a really important one from a sentiment standpoint, right?
Yeah, I agree with that.
Yeah. So that's all out the way I'm thinking about that.
No, look, if we touch that trend line and fail, that's obviously not going to be particularly good. And I'm not suggesting there's some magic with this trend line, but you're looking at pretty short-term downtrend line. We're trading up to it now. It's incumbent upon the bulls now to prove themselves and try to get it through. But if it gets up and fails on decent volume, then I think the next leg lower, believe it or not, I don't know if they're going to test the April lows, but you're going to start to have conversations about, my God, this stock is down over 50% from the all-time highs, which in a very short period of time, I think is significant, especially given the size of the company.
Yeah, so I had Dan Niles of Niles Investment.
The Annihilator.
The Annihilator on the Risk Reversal podcast. It dropped Friday morning. Go check that out. Dan and I talked for like 45 minutes about a lot of the things that we just discussed here, obviously in greater depth. And, he agreed with me on the core weave, these neo clouds. So like, for instance, if Oracle can't fund their build out, right? Like you would think initially that might benefit like a core weave or a Nebula, that sort of thing. But look at how they've just been destroyed. Now, core weave had a massive, massive short squeeze on Friday. It's interesting today. It's up 3.5% or so. Let's see if it can hold. This is another one, Guy. If this can't hold and it starts, on its way back towards 70 or something like that, then the health of this trade, you could say, well, you're picking on some of the, the weaker ones here, right? But that's how it starts. And I'll go back to the chips. I mean, Broadcom was a monster. Broadcom was trading at all-time highs into its print. And so there's an example of a name that is not the ugly red-headed stepchild, in the semi space, and there's been so much talk about these custom silicon. And let's take it out another one. So Amazon, you would think they have this Trainium chip. This is a custom chip, okay, that is meant to compete with NVIDIA GPUs, that sort of thing. And they just got a big contract from OpenAI. And you'd think this thing would be trading better, wouldn't you? And I read a bunch about this Trainium. There's certain aspects of it that perform just as well as a Blackwell 200 or something.
NVIDIA, yep.
Yeah, but
Amazon is one that you're right, that I thought would be trading better. And here we are, we took out the levels that we saw in January of this year. I think that was about 240 or so. We broke through it. We traded up to about, I think, I want to say 258. And now we've sort of, just sort of done this drag lower over the last couple of weeks, which I think, I don't make a huge deal out of it, but you could say it's a bit of a failed breakout there. So that's something worth watching. By the way, I forgot to say, about an hour or so ago, Liz Thomas, she of SoFi, the two of us had a conversation. We sort of really picked through her year ahead, look ahead, the show must go on, what she does with Mario. So that will air right after we're done here on Market Call. So don't leave. Stick around for that.
Stick around. Let's just hit a couple of these other names, guy, that I talked about with Dan Niles. Google is interesting to me because we're talking about OpenAI, and Dan has been very positive on Google for a whole host of reasons. A lot of the ones that we've been talking about, if you think about, if you believe that Gemini is as good of a model as, let's say, OpenAI and their latest models, because these guys keep upgrading them and they're incremental, right? You think about distribution. And so that's been the story here. If you think about all the platforms that Alphabet has that have multi-billion, I think they have 7 with at least $1 billion. They probably have 5 with $2 billion. So they have distribution. And then the story was also their TPUs that are competing with NVIDIA's, and they're going to make commercial arrangements with other folks. So all of a sudden you have a new business line, you have Google Cloud, and then you have the distribution with Gemini, and you still have this ad business, that is a monster. And a lot of folks, I think we had the Melius guy on, over the summer, talking about the existential threat to Google because of the cannibalization of their
rights, I believe.
Yeah, of their search ad business. And really what we're finding is, yes, there's less of that traditional blue link search, but their options overlay or their AI overlays. And by the way, Gene Munster's been all over this on our podcast. He's been over it on CNBC with us on Fast Money talking about this. So really what you're seeing now is that the traffic that publishers or, advertisers are getting from these AI mode are much better quality than they were under traditional search. Now, what Dan Niles had to say about this, he's like, well, at some point when OpenAI, and they're going to have to do this, everyone knows this, they just launched a browser, but they're going to have to do ad-supported searches, right? They're going to go out of this year with $20 billion run rate for revenue. It's all consumer for the most part. They're going to have to, they're going to have to monetize better. And he said, this is Dan, and we go into great detail about this. At some point, this will come at the expense of Google, but he's not making a real bearish case. And my response to him, and I think I'd love to get your take, is that it probably hurts Meta than it does Google, because Meta they're not a hyperscaler. They don't have the cloud business, and that helps distribute, I think, some of this, if they did get some search weakness, for Google.
Yeah, it's going to be fun to see what happens. I mean, the existential threat that people talked about earlier this year, which, by the way, looked like it was coming to fruition in April. I mean, I think Google traded down about 140 or so. So Google's up over 100% more than 100% since the April low. So obviously it didn't play out. And you saw it with the ensuing quarters when you realized the search business was still robust. And I think we've done a decent job. Once we took out the January high of like 205 or something, we said the stock should be sort of off to the races. And that's what's effectively happened, I want to say, since August, middle of August or thereabouts. And we sort of made a valuation case where I thought it could get somewhere between 345 and 350. We fell short, but here we are now. So it feels to me like Google's probably going to trade water for a while. But the risk that Ben talked about earlier this year, I don't think is necessarily gone away. I think it's just sort of been pushed out. So as much as Facebook probably has its own issues, I think at some point in 26, you're going to start hearing similar conversations about the risks associated with the search business and AI to Google. That's just my sense.
Yeah. Well, the other thing is that if Perplexity or OpenAI, who launch browsers, if any of those sort of catch on, and again, they're coming off a very low base. And, I think Chrome, which obviously Google owns, has 65% of global market share on the browser front. So it's going to be really hard to displace that whatsoever. But if there's any potential upside there and you start seeing, ad supported models from both of those, might they eat in a little bit? But again, my point was, I think it probably hurts Meta than it more so than it does on Google. Apple, really quickly, Guy, this was one, again, that you had been saying that because they're not spending hundreds of billions of dollars, I think they spend low single digits of their revenue on R R&D, this is one that is benefiting. Put that line back up there, though, that trend line. I mean, this is one guy where, I can see all of a sudden that you have some sort of deal with Google, which they've already kind of made to some degree, for Gemini to be across iOS, right? This one might benefit. We've been talking about this. Might you see this thing, break and go back to 250, which was kind of the breakout level? But I think you buy dips in Apple because maybe you finally get that upgrade cycle, and maybe this is where you start to see increased margins on the services front because of finally an AI trade. And by the way, and I know you're excited about this, next year is going to be the 20th anniversary iPhone.
I know, I can't believe it. I mean, I bought T-shirts and everything. It's like and I know so many people. I'm going to get online early for that without question. But that's one trend line. The other trend line, if you want to draw it from the April low connected to the August low, and then the third point will probably come in off a time decay, right, sort of around the levels that Dan's talking about here. So there you go. That's your sort of second trend line, which again, I'm right. So off a time decay, you're looking at sort of 250 or so. So that's the one, to me, that's your ultimate support here, at least in the short term. And I don't think it's out of the realm of possibility that we see a trade back down there. I've seen moves of that magnitude a number of times over the last couple of years in Apple.
Yeah. And you know what I see there, Guy?
A hungry alligator.
I see the hungry alligator. I see the hungry alligator. And I think at some point you're going to see that thing move back towards 250. And I think that's probably a good spot. So my two names for 2026 that I'd like to buy on weakness is it's Apple and it's Google. But again, I'm not buying them here. I think Meta, if they fill in that gap, I think you resell it to some degree. NVIDIA is a tough one. One thing I'd say about NVIDIA, Guy, is, there was an article over the weekend and it was talking about, I think it was Tencent, which is owned by ByteDance, that they have been training, and we've been talking about this, their models in Singapore and, all these data centers, not in
they have
China.
like a facility, like a track, and
so they have these data centers,
weight benches and stuff. You ever been? Some of the facilities are unbelievable.
Yeah. So the quality of these open source models, and there's a big difference because the ones at OpenAI and some of the folks here, look at there it is in the FT. There's this company in they're being this is a company in Japan, a data section. And so, you can make the argument, Guy, that maybe NVIDIA that been, saying that they're missing out billions and billions of dollars in revenue on a quarterly basis because they can't sell into China. Well, this is China and some of their companies maybe being really innovative, right? Because of these export bans and the like. And maybe their models are being trained, but at a much less of a cost because they don't have to build out the infrastructure. They're just going in and renting the compute and training the models. And so maybe there's a chance that there's not a huge amount of revenue out of China. And the other thing is when NVIDIA ramps up production of these H200s or these B200s or the, and goes to sell at China, it means that they're actually not producing other chips that might go somewhere else.
The China story, there's a couple ways to look at it. The fact that we're now seemingly allowing NVIDIA to sell into China, the sort of the scaled down versions, whatever, suggests that, people will say that will sort of halt innovation in China. Yeah. And you're actually doing us a solid by allowing them to have, our watered down version of these chips. That's one way to look at it. The flip side of the coin is, you're potentially giving them a leg up. I don't really know where I stand on it, but I will say this. What you just talked about is one word: competition. And competition is coming. And the other word that people don't want to seemingly acknowledge is the cost for compute is going to come down. I mean, that's just historically what happens. So for people that think somehow NVIDIA is going to enjoy these margins for the remainder of mankind, it's not going to happen. And despite the fact that they have a huge head start on everybody else, I think things move a lot faster in today's world. And I think that you're going to be surprised by how quickly people start to close the gap on them. And that's why I continue to be really cautious at best, pessimistic at worst in terms of NVIDIA.
Yeah, that chart to me is so heavy. And if you had the 50 and the 100, the 50 is about to cross below the 100, and they
what do they call that?
Death Cross, I think. And they're literally, Amanda, throw those in there. They're literally bookending this today's like little move here, which I think is kind of interesting. So to me, I think you probably see 160 in the not so distant future. That is that 200-day moving average. The other point, famously, this is Jeff Bezos, the founder and former CEO, now chairman of Amazon. What did he used to say about margins, guy?
Your margins are my opportunity. See, we didn't rehearse that, but I happen to know it.
No, I know you know it. But this is going back to what you just said about NVIDIA's margins, right? This Trainium chip is less expensive, and it's, so you're going to have lots of companies as they get into the inference phase of their models, where they have the models kind of trained up, and then the new versions of them are just incremental. You're going to see lots of companies go for cheaper sort of chips to do specific tasks, and that's something that's going to weigh on NVIDIA's margins. And then the other thing is like Trainium or Amazon AWS, they're basically creating this open source software to compete with CUDA. CUDA software is one of the main reasons why folks get locked into the NVIDIA ecosystem, right? So to your point, there's going to be a quarter where the company doesn't, they've been giving like guidance on margins that, has been basically right in this mid 70s sort of range, right? At some point, they're likely to guide down margins 200, 300 basis points, and the stock's lights out at that point. I mean, like literally, like as much as people were excited about the way it was tripping, they were tripping over each other to buy it on these, then it's like literally they sell every rally.
Well, strange things are going to happen if these averages start to cross. And we obviously saw what happened on the bullish side of the equation over the summer, as in early June into late June, as the moving averages started to cross, the stock took off. Now we're on the other side of the coin, where you potentially could start seeing moving averages roll back the other way. And it's going to be fun to see if and when. And 158-ish is going to be sort of your line in the sand. On a 200-day moving average, it continues to slope higher, but at some point, it's probably going to start to flatten out. So I think NVIDIA is going to be obviously a stock we talk about all through 26. I don't know if it's going to be for the right reasons, though.
Yeah. All right. Last one in the Mag 7. This was not by design, but we kind of ripped through these things, and we'll get to some other sectors here. Throw up the Tesla. Okay. A 1-year chart right here. And I said this to the folks, and you guys go in the chat and you tell me if I'm full of shit or not, but I don't think I'm full of shit here. Go back to that early September day, and the stock, it was early September, and the stock was getting back towards that May high. And the stock was like 357, 360 or something like that. And I basically thought, I did a pod with Dan Ives, and he will take credit. He'll say that earlier in the day, he kind of got me geeked up about this stock, but we did the bull bear, that sort of thing. And it was the last time that I really had one of my, in hindsight, I mean, kind of, I don't know, maybe I had to bug up my, whatever about Elon. And I really was very bearish on their auto business, and I have been for years, and that's been right. But the fact that the stock is a meme stock and they don't care about autos anymore, I thought this stock was ready to what, guy?
Party.
Yeah. And it partied and had that move. That next day move was insane. Like, look at that, right? And it kept on going. It kind of nearly filled in that move. It back and fill, bounced off that 100. And you see what's going on here. But at the time, and not long after, I said, I'm done talking about this stock. Didn't I say? I said, he's won. It's over. If the people only care about Robotaxi and Optimus and whatever else, then there's no reason to kind of talk about the auto business with this stock. And I haven't, and it is what it is. But there's really funny stuff. I mean, it's not like it's over as far as the projections that he makes, because they're talking about, data centers in outer space, which obviously would be amazing for SpaceX. SpaceX, they're talking about going public at a $1.5 trillion market valuation, right? And then you're also hearing Elon get increasingly geeked up about Mars. But there was some tweet that somebody sent me, is amazing. He's talking about all this green lush, Mars is going to be lush and green and this, that, or whatever, guy, and it's going to be this amazing. And somebody tweets at him, does Elon know that it's negative 80 degrees on Mars? I mean, it's 50% further from the sun than the Earth is. And so, like, that one comment, that one factoid kind of throws every single thing.
I'm pretty sure he knows that. I mean, I got to give the guy a little credit.
I know,
pretty sure he's aware of that.
But that's the internet. That's the way the internet works, guy.
Love the internet. By the way, the great movie with Matt Damon, who was able to sort of grow vegetables on planet Mars. Good for Matt Damon. Very, he's very industrious. But as
He
they
was
say,
resourceful.
what's
Yeah,
that?
but you know what was really cool? So Matt Damon, okay, in that movie, he was like,
The Martian.
he was like the hero. He was like, right? Like he was the guy that you're rooting for, this and that, whatever. There is a cameo. And by the way, people, it's a spoiler right here. Stop listening if you haven't seen Interstellar and you think you want to see it at one point, but the movie's been out for over 10 years. So if you haven't seen it, I'm sorry. But there's a cameo when Matthew McConaughey, you're a huge fan, and he is a big fan of what?
Fast Money.
Yeah, he's a big Fast Money fan. But there's a scene when he gets to Mars, and there's a guy.
Matthew McConaughey or Matt or
when
Matt,
McConaughey gets to Mars, and there's somebody there. It's freaking Matt Damon. So he's still there from The Martian.
I say Matt Damon was in Mars before.
He was in Interstellar, this movie, and he's still there. And I know it's breaking your brain right here. Maybe Jacob, maybe you can find something about that. It's the weirdest cameo. And you're like, wait, at the end of The Martian, sorry about this one, is a spoiler. He gets back to Earth despite being able.
Matthew McConaughey or Matt Damon?
So we have Matt and we have Matthew. Let's not mix these up anymore. Okay.
I used both their last names. Matthew McConaughey or Matt. Who got back to Earth?
Damon at the end of The Martian. Spoiler alert. Sorry.
Is that when did he buy the zoo after that?
He must have. I think he bought the zoo before he went to Mars. That was a Cameron Crowe movie. And it's considered, once Cameron Crowe, he did Singles, then he did Jerry Maguire, and then he did Almost Famous. Jerry Maguire and Almost Famous are top 10 movies for me, 100%. 95 and 2000. And then afterwards, Cameron Crowe made a string of horrible movies. Vanilla Sky, Elizabethtown, I Bought a Zoo. Then there's this other one, Aloha. I mean, together, these are four of possibly the worst movies ever made. Now, Cameron Crowe was on the New York Times interview. This is a long interview they do on Sundays. This is over the summer. And the question was basically, where'd you go, Cameron Crowe? And he talks about it a little bit. He's very introspective. He's very honest.
Well, you're going to have some failures along the way. You got to keep swinging the bat. We bought a farm,
not good.
Not my particular. I didn't ever heard of the movie Aloha. I would say sayonara to Aloha.
You know who's in it? Bradley Cooper.
Love Bradley Cooper.
And who's the woman? Emma Stone. And she's a great actress, Emma Stone. Both of them great actors in that, in general. So he made a string of really, really bad movies.
Well, it happens. By the way, since we have Tesla up, there is a question from what Amanda, by the way, is still great, and she's mad at me. But there's a question about Uber as opposed to Tesla. I think it's a sort of a would you rather if you want to throw it up. I think Uber sold off enough where it's probably found itself some support. The moving averages obviously have crossed, but I do think we're going to sort of get back to the higher end of the band, which is sort of mid-90s or so. But Tesla, the point that I've been making for a while is when his pay package, that being Elon Musk, one of the metrics is stock price. Well, he's incentivized to get the stock as high as he possibly can, which means that's what's probably going to happen. And I've been pretty consistent on that. And I think the bulls have been saying forever that you're looking at it wrong. It's got nothing to do with the auto business. That's a lost leader. Now more and more people are coming to that realization. So these levels, it's Uber for me over Tesla, but I can understand why people would flip it.
The U in your tube.
It is a U in my tube, by the way.
But by the way, I mean, I literally, all you people wanted me to shut the heck up about Tesla.
You got what you asked for.
I've shut up. I've shut up about Tesla. I could care less. Have a ball. You want one of their crappy cars? Then go get one. You know what I mean? And let me tell you something. If their robo-taxi is better than Waymo and this, that, whatever, I'll go in it. What do I give a crap? You know what I mean?
Yeah. I love getting in those Waymos. I can't get enough of them. They have one on Park Avenue in the city. I mean, it's like there's a Waymo stop, and
they're training them here in New York. Guy, what do you make a retail?
Well, let's talk about that because I appreciate you bringing that up because Bobby 10,000 or 1,006 is asking about Costco. Where does it get interesting? And I will say, you've been pretty consistent about this one in terms of not trading particularly well now for an extended period of time. The ultimate level appears to be, to me, Dan, the support should come in the form of the August of 2024 low, which is about 825. So I guess what I'm saying is we're getting close to levels where this could be interesting. So, but for whatever reason, there's been a disconnect between Walmart and Costco. I want to say since beginning of the year, quite frankly. I think that's when Costco made its all-time high. So I think Costco around 825 to 830 is definitely worth a look.
Yeah, and put a 5-year up for a second. You better be, ready to kind of average in a little bit is the one point I make. Look at that high from early 24 and draw a horizontal line. Again, this is just the technicals. If you think about this company, look at that. See how it, and then it checked back, guy. When you look at that,
800, 795, 800. Yep.
Yeah, and again, the technicals, do they help you maybe as an input, right? If valuation is always expensive and people will say, well, they have that recurring revenue stream. Yeah, but it's like low single digits. So I mean, to me, this one fundamentally, there's something going on there that is not part of the narrative of Walmart. Throw the Walmart up there. Again, this is not a valuation that, Walmart used to trade at a big discount, right? Valuation wise to Costco. But this is a really, to me, if you could come up with an argument why you would buy Costco other than oversold, this could be a really interesting pair. What is that 200-day guy, which is really back toward where the stock bounced, going back a month or two. Maybe a target
99 and a half. Yeah. Ish.
100. So that could be interesting, to me.
My views on, I'll be consistent here. I think you're just looking for places to get long Walmart still, despite valuation. And, maybe there'll be a day where the market cares for whatever reason, but we haven't seemed to find it. I have a statement from one of our viewers, not a question. Maybe Amanda can throw this up. This is from Fatal 999's8. I won't say anything until it pops up.
He sounds dangerous.
Watch this, Amanda, if he leaves me hanging here, but I might have to just read it myself.
So you're saying she's not doing great? Is that what you're saying?
So she's doing great.
It's not doing great.
Well, this is from Fatal. There you go. Dan looks like a George Clooney cousin. That's high praise.
I love it. I love Clooney. I know you love Clooney. He's a throwback, which is, I think, why you love Clooney. Is that fair to say? 100%. You love him in the Ocean's 11.
He's just to me, he could have been born in like the 1920s, like Clark Gable, Jimmy Stewart, those types of people. Classic.
So, please take a screenshot of that so I can send it to my mom, because my mom often says that I have better hair than Clooney, but I'm going in the direction with a little salt and pepper. You see what's going on here? I like to think of myself as maybe John Hamm, like the hair. I'm not going anywhere else, people. I don't. Yeah. John Hamm is a great looking man, but I'm not going to screenshot, please, for my mom. But he's got a movie out right now, Clooney, called Ray Kelly. And it's meant to be, he's a movie star. He's an aging movie star. He's dealing with being an aging movie star. And I haven't seen it. Ray Kelly, I hear it's really good. I hear that Adam Sandler's in it, and he's got a dramatic role where he's just killed these dramatic roles. This movie, Hustle, I don't know if you guys have seen this. He's a scout for the 76ers. An amazing movie. Supposedly Punch Drunk Love. Amazing. That movie, what's the movie, Bill, with Kate, where he's Uncut Gems, supposedly amazing. So here's a guy, I think he's better as a dramatic actor than he is as a comedic actor, because his goofy comedian stuff, I'm just not there for it. I don't know. Oh, Bill's waving me off. What do you think about that?
Well, I was going to say something. This is for sort of the like the Rene Descartes or the Jean-Paul Sartres out there. If you're alive and if you're a movie star, you are by definition an aging movie star. The only time you stop being an aging movie star is when you die.
Yeah, but I think that what the point here is that
everybody that is a movie star that's alive is effectively an aging movie star.
But I'm going to say this because I know he's one of your favorite actors. He's going into this kind of late Paul Newman age, you know what I mean? Where you just start playing different roles. You understand what I mean? Like, that's the point. Like, Tom Cruise is what, 61, 62, and he's going to have to think about what is his late stage career. Is he going to be more like a Paul Newman, or is he going to be more like, I don't know, Nick Nolte? You know what I mean? Like there's two different paths you can go down.
Well, Tom Cruise must be an alien because the guy, Tom Cruise is a movie star, a
100%.
movie star.
He's an action star, though. Really,
He is from.
He doesn't play dramatic roles. I mean, like in A Few Good Men, he played a dramatic role, obviously directed by Rob Reiner, R.I.P. But that was a dramatic role for him. These last 15 years, it's been Mission Impossible, it's been Maverick, it's been Jack Reacher. There's also this thing, and I don't know, Jacob, maybe you can find this out. He runs in every single movie he's in. There's Tom Cruise running.
And seems to be very fast, unless it's some sort of AI generated thing.
Now, here's another guy who's also, you're going to say, is an alien, who's born on the exact same day and the exact same year as you, Dec 18, 1963. Who is that?
That's Brad Pitt.
He does not age, unlike some people born in that day.
I love Brad Pitt too.
But is there a but?
No, there's no but. I mean, Legends of the Fall. My God.
That was 35 years ago.
Doesn't matter. It's a great movie. It really is a great movie.
Yeah. Let's just see. I hope they do a side by. Look at that.
We doing what?
Good looking man. I mean, like, look at that. And there's a line in that movie where the mother of this young racer that's on his team, she said, "Woo-wee, he's a good looking man."
Woo-wee, he is a good looking man.
Yeah.
By the way, before we go to gold, and we've danced around a bunch
all
of
that glitters.
All the glitters is gold. We're going to pull up a gold chart. Yeah. But Dan, I got to tell you something. When timing is everything, you need a platform that can meet you where you are. With Fidelity Trader Plus, you can customize a chart or start a trade on your desktop setup at home and pull it up on your phone or laptop at work. Fidelity built their new advanced trading platform from the ground up with better connectivity and more powerful tools than ever before. Traders can make smarter, faster trade decisions from anywhere. Try the all-new Fidelity Trader Plus, the next generation of advanced trading from Fidelity. Back to you.
Wherever you are, next 2 weeks are those sorts of weeks.
We're gonna be, yeah.
You're gonna be all out. You want to be connected. You might want to make some trades. Excuse me. That's what it's all about here, people. And again, like, let's put a couple year-end sort of situations in. Let's think about the new year. Dogs of the Dow, I don't know, like some really poor performing stock. That actually, folks like to kind of get out of the losers, but maybe get back in, early in the new year, or start to build a position in some of the losers in the new year. So if you're out and about, like some folks are, you're going to need a platform that does that for you, guys.
Today's world, absolutely, because nobody is really tethered to anything anymore. By the way, this is a nice comment from Ramesh Spot 8539. I don't know if that means he was born on August 5th, 1939, which would make him one of our older viewers and listeners. Hard for me to tell you, but thanks for all the market insight passed on to the subscriber this year, and we hope the same continues in 26, as do we. Your views on European banks, Deutsche Bank, BCS, ING, I will tell you, I haven't looked at them closely enough, but I promise you we will revisit this tomorrow. I'll do a little work in the next few hours, and we'll do a look back tomorrow on these, if that's okay.
Yeah, I mean, just looking at the DB, I mean, this one's breaking out. Guys had a nice little run. We'll take a look at them tomorrow, and then, like you said, U.S. banks acting really well here. Also, I think that's kind of worth noting. JP looks like it wants to party a little bit. Yeah.
Despite some of the concerns with Jamie Dimon, and listen,
what are the concerns? What concerns?
Valuation concerns, macro concerns. I mean, he's been saying it for a while. So it feels like the market is sort of, I don't know, dialed him out a little bit.
Okay, I misunderstood. I thought there's concerns that he might be like succession.
No.
I got you.
No, there's clearly a succession plan. My only point was, like, he has been bringing up some ways some of the same things we've been talking about for the last couple of years, and they have not come to fruition. And when he said, by the way, that JP Morgan was expensive the first time, he said it when the stock was about $205, and since then we've rallied some 60%. So again, valuation, we talk about it all the time. It's clearly not a timing tool.
Yeah, throw up Goldman though, because if you just think about over the last couple weeks, guys, since that Netflix bid and the competing bid, this is for Warner by Paramount. Okay, big M&A deal. This is going to be a big deal, right? And I'm sure, I don't know, I'm just throwing it out there. Maybe the guys can figure it out and the gals. I'm sure Goldman is advising one of them and Morgan Stanley's advising the other. I'm sure JP Morgan's involved in that. So then on the other side of this is that, if you're going to have a SpaceX IPO, it's going to be a free for all, a $1.5 trillion deal, right? They're going to be raising all these deals. OpenAI raising 100 billion at 850 billion valuation. I'm sure Goldman, Morgan, JP are involved in that. And the second tier, and BCS was in that. You got Barclays, you got Citi, you got Bank of America, you have RBC, you have a handful of these second tier. And when I say second tier, I don't mean to denigrate them, but if you just look at the league tables, you'll see there was one bank I just read about that's been moving. What bank is this? Moving up on the league tables fairly quickly. So this is shaping up. That Goldman Sachs move, pull up Morgan Stanley. That's about M&A. That's about lending to private credit. It's about IPOs.
It's all about capital markets. Yeah, without question. I mean, say what you want about David Solomon without getting on a soapbox here, but his under his leadership, and again, I think we talked about it last week. I think he's the third CEO as a publicly traded company. I think it was Corzine, Lloyd, and him. I mean, he has completely outpaced the prior two. So good for him. Or maybe it was Paulson. My point is, like, he's done a wonderful job through the lens of the stock.
Yeah. If somebody could find, look at this. This is Doug Cass, Billy Crudup. I love him. Morning show was a great and almost famous. He was amazing. I mean, he was just make us look cool. Remember that? I mean, just make us look cool. And Philip Seymour Hoffman's character, don't make friends with the rock stars. You know what I mean? Like that's what he said.
We lost Philip Seymour Hoffman too soon.
He's a great actor.
If they do if somebody makes a movie about Philip Seymour Hoffman, they should cast Jim Gaffigan to play Philip Seymour Hoffman. A lot of similarities there.
Well, Philip Seymour Hoffman's son is turning in. He was in this Paul Thomas Anderson movie. I love this movie. Licorice Pizza came out 2 years ago. Do you know what a licorice pizza is, guy?
Please.
It's an album. It's a record. Think about that. Licorice Pizza. And his son was in that. He was great. I mean, I know this sounds really sad. His son could play him. Like, you know what? I don't know if you saw this show on Rob Reiner and his wife Michelle last night on CBS. It was awesome. And Kiefer Sutherland was in there. He could play Donald Sutherland. You know who else was in there? Michael Douglas. Michael Douglas could play his dad. Like, think about that. Michael Douglas looking pretty old there. Kiefer great.
People forget. I mean, Michael Douglas he's got to be in his late 70s at this point.
Yeah, and he had some.
He produced One Flew Over the Cuckoo's Nest. People don't know this.
Yeah, he did. Amazing movie with obviously Jack Nicholson, Danny DeVito.
Just great, ridiculous.
Great movie.
Louise Fletcher.
Yeah. Who played Nurse Ratched. Jamie Dimon. This is Doug Cass saying this. I'm freaking love that Doug is here because this is the thing. This was last week. Remember 2 weeks ago where freaking JP Morgan sold off 5% in a straight line. And the comment was by, I think, their CFO at an industry conference. I think it was Barclays conference. And Doug saying the concern last week was larger than expected tech spend, $105 billion expected, took the stock down $20 in a straight line. Let's see how some of these other industries, how some of these companies are spending, because it's not just, the major hyperscalers. So that was a good one. And then Doug also saying, guy, because you went all full on philosopher on us. He said, I think, therefore I am.
Of course, Rene Descartes.
So some people throw up the spelling of his. I might have said Desocrates or something like that.
Descartes. I think, therefore I am. Now,
yeah, but you see what I was doing there?
Yeah, I do. I wish more people would think.
Therefore you are.
Before we get out of here, throw up a gold chart because you mentioned things that are partying. Well, I think we've done a really good job here because after that sell-off that we saw in the fall, we said it's probably going to be somewhat short-lived. It's going to get back on the horse. We thought it could take out the prior highs, and pretty much exactly what's happened. So we got to watch this one. We got to continue to watch it closely because I'm pretty convinced this thing is going to continue to do its thing in 26. Like nothing has changed, in my opinion, on the gold front. So stay tuned in 26 for what's happening there.
One last one. This question is from Dan N. 1238, whatever that means. What about Nike? The stock sold off, is disappointing earnings and guidance. Margins were far worse than folks had expected. Valuation has always been something here to keep an eye on. This space in general, it's very competitive. Athleisure has been one of those tough ones. We know Lulu's had a tough one. I know Lulu just had a activist make their way into that. Michael Burry, I think, is long of the Lulu. You have this on cloud, on. You have those. You have the Hoka's guy.
Competition. It's the other side of growth is what we're seeing now. Nike made its all-time high. Don't at me. I think it was the fall of 2021. Think about what the broader market has done since that point. I think Nike got up. I want to say it traded north of 180, but it definitely got close. And here we are at a $58 stock. This is against a broader market that's done extraordinarily well over that period of time. This is a problem. Now, at some point, people are going to say, well, just valuation-wise, it's too compelling not to own. I just don't think we're there yet. I mean, they continue to put up quarter after quarter of disappointing results, and I don't think it's going to stop anytime soon until we probably get to the low 50s. I guess we're close now.
Yeah, throw up a 5-year or 6-year. Do a 6-year, so it shows us that COVID low, which I just think, yeah. So it's interesting, right? So if you go back to 17 levels, it gets you back towards like $50. That's kind of where we bounced, guy, earlier this year or so. If you see a reacceleration, I mean, this company earned $4 in, calendar, in fiscal 2024. Okay. And you say to yourself, here we are expected to have $1.60 for fiscal 2026 and reaccelerate to about 250 or something like that in fiscal 27. That's next year. So you're trading at about 24 times if you see, a reacceleration in earnings growth, which the street expects, and then sales growth. I think they did, and this was record sales, guy, $51 billion in fiscal 23. Okay, that was an all-time high. Here we are expected to be like 46 next year, 47 billion. I think this stock is kind of cheap, and trading on the out year, which would be fiscal 27, is trading at 19.5 times. So if you get some things right here, take out, who cares about, that 21, 22 period. That was a lot of goofy stuff going on. I just think at $50, if you get back there, you just kind of close your eyes and you buy the stock.
Before we get to the conversation with Liz, riskreversal.substack.com. And send in your questions as we do a little bit of a mailbag next week. So we have a lot going on. By the way, the Substack is, I think we're north of 14,000 people, and I think we just started it like 2 weeks ago.
Yeah, we did. Look at that. I mean, it's a new look. So we changed the newsletter and the hosting of the site. It looks better there. There's going to be a lot more interactive, the way you receive our email updates. And so we're psyched about that. So go follow us if you're not following us there. Obviously, follow our YouTube. So Liz and you drop there. Dan Ives, myself, and my friend Adam Segolda, CEO, founder of Taboola. We have a great conversation about AI and ad tech in general, a lot of things that we talk about. That's going to be in the podcast store tomorrow on Christmas. We got a little gift for our friends. Oz Perlman, he is the mentalist. He sat down with Liz Thomas and myself. That's going to drop in the podcast store. He did a couple really cool things with us. We're also going to have a book giveaway. So follow the instructions there. Go follow us. Leave a review on Spotify or Apple. Okay, take a screenshot of it. That's for the Risk Reversal podcast. Send it to contact@Risk Reversal, and we're going to send you one of Oz's books. It's a great book. I read it 2 weeks ago. Read your mind. He talks about that he doesn't read minds, he reads people, and some of the tricks that he does. It's amazing. So check that out. Leave a review. Contact@Risk Reversal for the Risk Reversal podcast. You get a book from Oz Perlman. Listen to the pod. Watch the pod on the YouTube on Christmas Day. A lot of great stuff there.
Doesn't cost you anything. When we come back, Liz Thomas and I chat about her outlook for 2026 and some other things. So stick around, folks. This episode of Market Call is presented by Fidelity Investments and their all-new advanced trading platform, Fidelity Trader Plus. Try it at fidelity.com/Trader Plus. Fidelity Investments and Market Call are not affiliated. Views, opinions, products, services, and strategies discussed are not endorsed or promoted by Fidelity Investments. Fidelity Brokerage Services, LLC, member NYSE, SIPC.